Welcome back to Instables, everyone. Again, going over our intraday swing and long perspective again after our engulfing candle on Thursday, continuing on with that engulfing candle and bounce off of our 200-day moving average again with our gap up that we have after our engulfing candle. Where exactly may we be headed next, as we have Powell speaking again Tuesday and Wednesday, non-farm payrolls coming out on Friday. I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room. Go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the spy with you guys here again, looking at our intraday momentum off the bat, looking at our daily candle structure so we know what kind of momentum we are leading into this coming week. Again, as we did have our engulfing candle after, again, Thursday's indecisive doji candle, we did continue on higher as we bounced off of our 200-day moving average. Now testing our 20-day moving average here, looking to see if we will possibly continue as we're leading into Powell on Tuesday and Wednesday. Non-farm payrolls coming in on Friday. We will have data-dependent momentum coming into this week, in my opinion. Not as much predicated on major confirmation here. Unless we get a major rejection here, we get a possible major engulfing candle to Powell, assuming that Powell would be hawkish the very next day, again from Tuesday into Wednesday. That engulfing candle could be that continuation and gap fill that we had from our engulfing candle and our bounce here, and so that could be our anticipation and continuation from Tuesday leading into Wednesday, and we can assume that we would have more hawkish Powell to come the very next day. So in my opinion, if we had a hawkish Powell on Tuesday, we can assume continuations on that momentum. And again, with that assumption would be technical assumptions that we had on our gap up, that we would fill those gaps to the downside. And ultimately, to have that bearish momentum, we want to see our 20-day moving average crossing below our 50-day moving average and continue to drop down below our 200-day moving average, which ultimately would be very, very, very bearish here. We'll see if that happens. Again, very much going to predicate what exactly Powell mentions. And after our overreactions to the upside from Thursday and Friday, I just would be cautious playing too heavy to the upside at this level as we are testing our 20-day. No matter what here, in my opinion, very cautious. Even if we overreact to the upside, we can't assume that we get a possible inverted hammer here, possible rejection that would give us that possible major sell-off that we have on Tuesday. We'll see exactly what happens. But again, this confirmation that we're looking for also with our 12 crossing above our 26 on our MACD, that we are looking for confirmation, will be predicated on swing term momentum. Now looking at our weekly chart again, looking at our swing term momentum, one very key indicator that we have been keeping an eye on has been our 20 weekly moving average now crossing above our 50 weekly moving average. We have not had that happen throughout the duration of our last year of selling off since we did cross lower. So again, we have been keeping an eye for that possible bullish momentum, and that's why we had a major spike closing the week. And now we are looking to see if we can possibly continue on with this rejection on our 20 weekly moving average to possibly continue to respect it for that possible continuation. So again, we are looking for that possible bullish candle structure, possible close and continuation that we would be looking for. So again, that is our swing term momentum. Again, looking at our MACD on our weekly chart, one very key indicator that we have been keeping an eye on as well has been our 12 and our 26. We were looking to see if we can get our 12 to start to curl up, and that we had on Friday gave us a spike here for that possible higher high here with our 12 continuing on higher. That would be what we're looking for that possible continuation. But what will confirm here is that increase in buy pressure that we have not been getting. So again, currently we are sitting on a continuation on decreases in buy pressure, again with our white shaded lines on our MACD. Again, we have our EMA lines above the median MACD showing us that possible continuation, and that's why we have been keeping an eye for that possible continuation as our 20 weekly moving average is now crossing above our 50 weekly moving average. We'll see if we do continue, and as we do switch from our swing to our long momentum, very much going to predicate exactly how we close with that possible bullish candle structure on the weekly chart to show us exactly how we're going to close here. Again, very much in the beginning of this candle as we are beginning the month. Again, we mentioned last month as we did have a solid green bar that we could get that intraday possible swing term rejection since we are testing our 20-month moving average. Now we did close with that rejection candle. Very much looking to see how this candle closes if we do possibly cover our prior bodies candle to show that we are possibly engulfing higher, but we ultimately do need to close above our 20-month moving average if we're going to possibly have that continuation. And the largest indicator that we have been tracking has been our 12 EMA crossing back above our 26 EMA on our MACD, on our monthly chart, showing us that possible continuation if we are going to be playing long term. And until that does happen, nobody can tell us that we are safer to the long side. So again, long-term players very much looking to see if we do cross back higher. Again, since we did cross lower, we have been continuing on lower. We still have that possible bearish momentum that could happen if our 12 continues on below the median MACD with our 26 for an overall sell-off. Ultimately, going into this month, we want to see if we do start to curl up, if we have that possible outlook of a possible swing or long-term play here. And again, that does not necessarily mean we are going to break into higher highs here on our EMA lines. That just shows us that we could have that possible, again, swing or long-term momentum. We'll see exactly what happens leading into Tuesday and Wednesday with Powell. And again, our non-farm payrolls on Friday. Again, if we get a possible rejection leading into Powell, possible doji candle coming out, or possible, again, inverted hammer that could come out just to show that we are rejecting our 20-day. For that possible major rejection that can happen if Powell comes in very hawkish for a couple days straight, and then maybe non-farm payrolls gives us that possible continuation, or Powell comes in very dovish somehow, mentioning that inflation is better than we may think, better than data even says, and gives us this major bullish possible scenario where we jump above our 20-day moving average, and then we would be looking for that confirmation on that bullish candle structure to continue. So again, that's what we're looking out for overall. That's what we're going to be looking out for leading into this next week with Powell and non-farm payrolls. Now, again, with that said, if you are a day trader, if you're looking for pre-market news before market open, if you're looking for that team that loves to get these major volatile movers in front of you as much as possible, looking for consistent movers is what we continue to look for every single day in the Instabills room. Go to instabulls.com in the description below, and for only $15 a month, you will never miss a breakout alert today again. And again, all of you Instabulls, continue to take with market users as we have been. A lot of data coming out this week with Powell speaking for 2 days in a row, Tuesday and Wednesday. And then we do have non-farm payrolls an hour before market open on Friday. CPI coming out the following week. Again, making sure that we are cautious with lots of jobs reports also coming out this week. And again, if you guys do like this video, it does help the channel grow. And I do appreciate you guys very much. And again, God bless you all. And I'll see you guys in pre-market.